Hi, I'm Brian Arcese, Portfolio Manager on the Foord International Fund. I'm here to provide an update for the fund's performance through the third quarter of 2022. The fund declined 5.2%, outperforming global markets in a particularly volatile quarter. Looking solely at point-to-point performance, however, masks the market intra-quarter volatility. Investors happily welcomed a modest deceleration in headline inflation, driving developed market equities nearly 12% higher to begin the quarter. This exuberance was short-lived, however, as continued high core and headline inflation extended decidedly into the services component. The U.S. Federal Reserve remains hawkish. The committee's most recent 75 basis point rate increase was accompanied by the now widely replayed statement by Chairman Jerome Powell, "I wish there was a painless way to do this. There isn't." From mid-quarter peak to quarter end, global equities declined more than 16%. Our international fund has been positioned well through the first 3 quarters of the year, declining 4.6% against the precipitous 25.2% fall in global equities and 21.3% decline in global government bonds. The fund's asset allocation contributed most to fund performance during the quarter, driven by the fund's hedges, largely in the form of short S&P 500 futures, as well as the fund's allocation to cash, which represented nearly 30% of fund assets. Having largely been absent credit leading into what the fund managers believed could be a potentially meaningful decline in the asset class, a decision which has borne fruit, security selection within the fund's modest fixed income positions also contributed positively. Fund positions in 4 short duration credits, both corporate and sovereign, each performed better than their respective benchmarks during the quarter. Weighing on fund performance during the quarter were 2 of the portfolio's interest rate sensitive equities, including Vodafone and SSE. Held primarily for yield, interest rate sensitive securities broadly underperformed during the quarter in the face of rapidly advancing real rates. Additionally, performance of Vodafone and SSE, both UK domiciled with sizable domestic business units, was hindered due to the precipitous decline in the British pound, which declined 8% during the quarter. The International Fund remains conservatively positioned with cash and equivalents nearly 1/3 of fund assets. Our credits are of high quality and short duration, while our equities are largely defensive with a sizable portion hedged. While we anticipate volatility to continue, the fund is balanced to not only survive but thrive in varied market and economic environments.